Ladies and gentlemen, thank you all for coming out to the Stock Tank, where we actually are doing a week-over-week episode. We didn't skip one. We got Stephen Fiorillo here to present a very interesting stock today. But Steve, you want to tell us what you're presenting today?
No.
Stephen is presenting Altria stock, a very big. I think it is the biggest tobacco company, or at least private or publicly listed. And this is a large position in your portfolio, or just one that you're quite interested in right now, Steve?
You're wrong on both accounts, sir.
Okay.
Philip Morris is actually almost double the size by market cap.
Okay. I don't follow this industry at all.
And it is what I feel one of the most interesting dividend stocks at the moment.
Got you. Okay. All right.
So
dividends, a common play in my portfolio.
Yes, very common in both your portfolios.
Tevis, do you do any dividend investing?
No.
Okay. Steve, I heard you created a presentation, maybe even 16 slides.
You heard correctly.
Yeah, you want to show us what you have and present the stock from start to finish?
Yes, let's do that.
Steve, do you smoke?
Man, we're going to be talking about tobacco.
Okay. Oh my gosh, look at this.
Okay. I'm excited now. Let's do this.
Yeah, so I like dividends in addition to other things. Do not invest in Altria just because I like it. It is not a big position of mine, but I am invested in it and I like it and I plan on adding more. I could be 100% wrong, but I see a lot of potential. So let's go through it.
Sure.
So the king of dividend kings. So in order to be a dividend king, you have to have increased your dividend on an annual basis consecutively for at least 50 years. So a big term that people throw around is dividend aristocrat, because that's 25 years of annual dividend increases. And what a lot of investors believe is when a company pays a dividend, they're in a financially sound place because they have to forecast and be able to predict incoming financials over a several year period going forward, because a portion of their EPS that they're generating is getting paid out to shareholders. Now, when a company has a decade or several decades of paying a dividend and increasing the dividend, they're looked at as somewhat more stable companies, more predictable businesses, and some investors like that. Now, we are not always in an environment where the risk-free rate is as high as it is now. And I'm going to show you right now. This is the slide that I had at the end, but because of your comment before you hit live, we're going to show it first. So this is why dividend growth investing is exciting. So I went back as far as I could go back on dividendchannel.com because it does a great job of pulling all the data instantaneously, so I don't have to spend an hour doing everything.
Sure.
So the furthest I could go back was August 1st of 1995. And I compared Altria to SPY. So without reinvesting the dividends, SPY has grown more than Altria. But when you reinvest the dividends, or at least in this example, the total return of Altria is almost 3,500% compared to 1,100% for SPY.
Yeah.
Now, here's the big thing about it. You have a dividend that has grown 57 or 58 times over the past 54 years in Altria Group. And when you think about this $10,000 investment in 1995, the original investment would have purchased 415 shares, which is a forward annualized dividend income of $150, because at that time, the dividend was just over 36 cents per share. Today, your share base would have grown into just over 8,500 shares, and the dividend would have grown to $3.92. You would be generating over $33,000 a year in annualized dividends now.
Yeah.
So,
Okay. Wow.
so that's more than 2x, almost 3x your initial investment annually coming back to you in dividends off of a $10,000 investment. Now, I'm not saying that history is going to repeat itself because the dividend was a much lower, but being a dividend king, Altria certainly has the firepower and the business profile to continue increasing the dividend going forward. And you could see something somewhat similar, maybe not identical, but this is why I like SoFi a lot, because with the amount of shares that I have, if in 10 years they become one of the largest financial institutions, and if they start paying a dividend and then I hold it for another 20, 30 years, maybe I get this type of effect out of it.
Yeah.
Who knows?
Yeah.
But it's hard to argue with facts. And these are facts right now that your share count would have increased by 1,900% and your annualized dividend would have increased by over 2,000%, your income. I mean, these are numbers that are exciting off a $10,000 investment.
Yeah.
I mean, it's hard to not get excited about this.
Okay.
All right. So the largest yielding dividend kings. So these are the 10 dividend kings that have the largest yield right now. So Altria Group is just over 9%. You have Leggett and Platt, which probably you guys have never heard of. Am I correct in that?
Never heard of it.
Yeah, they make mattresses. They make the components for chairs, like the framework and mechanisms inside. They make aerospace stuff. Boring company. 3M, I mean, Target's on there, Coca-Cola company. So the 10 largest yielding dividend kings have yields from 9.3% down to 2.9%. And Altria's got 54 years of dividend increases, and they have a payout ratio of about 79%. So there's still room left in their EPS for future dividend increases.
How can you have over 100% payout ratio? Like Leggett and Platt does over 100%. I thought that was not, or even
Yeah, so I'm not familiar with Stanley Black and Decker, but if I was to bring up their financials, it looks like they took some charges which impacted profitability and net income and EPS this year. So this is all based on the 2023 forward, but in 2024, it goes back to a normalized rate.
Right.
Leggett and Platt is kind of the same thing. This year they had earnings decrease, but because they're free cash flow and cash on hand, they were still able to raise the dividend.
Got it.
All right, so Altria Group. So they have their operating companies of Philip Morris USA, Smokeless Tobacco, John Milton, Healy, Enjoy. They have a joint venture with Horizon Innovations, and then they have private investments in Anheuser-Busch, which I believe they own 10% of, and they own 45% of Kronos Group, if I recall correctly. Now, some of the things that makes me interested in is you always hear tobacco's dying, ESG, all this other stuff. I'm a person who believes adults can make their own decisions, so I have no qualms about investing in Altria Group.
Sure.
As long as they are not doing anything illegal, then I have no problem being a shareholder. I'm not here to pass judgment. They make a lot of money, and they are currently moving toward a smokeless future, which is very interesting. So then in their Investor Day presentation, they are showing that they are projecting out to 2028 that they're going to have mid-single digit adjusted diluted EPS growth on a compound basis. They've shied away from their previous dividend goal of paying out roughly 80% of their EPS, and they are going to now have a mid-single digit growth rate per year going forward. And they're really beefing up their smoke-free products. And their oral tobacco, I didn't realize that they own Copenhagen and some other brands, which are absolutely huge. So it's a
So-
pretty well-versed company in the tobacco industry.
So by smoke free, the only thing that I can think of, you're meaning like the e-vapors and stuff like this?
Juul, heated tobacco, those types of things. Yeah.
So I heard that they took a massive hit because there was certain states or something that was banning flavors and these sorts of things, and that was impacting revenues going
It was
forward. Is that true?
impacting Juul a lot, but they're working on other technologies with e-vapor and heated tobacco to move away from that area,
Okay.
which to me is interesting.
Okay.
All right. So now ESG was something that I believe was impacting companies like Altria Group because they were seen as sin stocks. But recently, BlackRock, State Street, and other large investment houses are now stating that they're exiting ESG funds. I think that that's going to prove to be a catalyst because I think you're going to see money now flow in to
Sure.
these beaten up companies that you had money not going into or just coming out of these because they didn't meet the ESG criteria. So I think that could work as a catalyst over the next year. All right. Past 10 years has not been pretty. Okay. But this has real resistance around the $40 level. So if we look at the $40 level back out to middle of 2014, it dropped 2019, maybe 45 bounced. Before COVID, hit the $40 level, went back up. During COVID, spent a little bit of time under 40, bounced up, a little bit more time under 40, then came up. And it's been dancing around the $40 level.
Right.
So that's a big resistance line for me. So anything approaching that $40 level, I've been adding to because I feel like it's that invisible barrier that even if it breaches briefly, which it hasn't in 2023, I don't believe, it looks like it just bounces back. And if I look at the RSI, it looks overbought and it looks overbought on the money flow index. So I think these are very interesting levels. And also with the marijuana banking laws that may get passed, owning 45% of Kronos Group could prove interesting. And that could be an underlying catalyst that plays out in the future. Because if you think about what does Altria Group do? Think about the amount of packs of cigarettes that they have in stores. Who's better to mass produce packs of joints?
Yeah, and distribute. Yeah.
And distribute.
Yeah.
So it's very interesting.
So, but what percentage of Kronos Group actually like they must be a really small player in the marijuana space. Whenever I think of like Canopy Growth or
Tilray and Aurora.
yeah, like there's Aurora. Yeah, exactly. Like there's so many. I'm sure Kronos might be a top 5, but probably at the back end of that, right?
I
They're
would think
public, no? I believe they're public companies.
they are. I would think the whole industry is small because they're really based in Canada right
Mhm.
now and not much in the US. But if the US changes those rules over the next couple of years, I got to think that Altria is going to throw some money into Kronos, let them leverage their facilities and their manufacturing and their distribution chain. And it could become a huge investment for them. So we'll see.
Do you think there's leverage on the stock or a certain percentage of the investors that are betting on this legalization? And is there any real roadmap to that?
I don't know. I can't
okay.
speak for anybody but myself. I think that if it happens, it's going to be a benefit for Altria.
Gotcha.
We'll see what happens, but it could definitely. I think right now this investment was made so long ago that anything positive will add to the bottom line
Okay.
because they're not really generating anything from it now. So if it
Gotcha.
takes off, it'll be very positive, I think. All right. Altria Group makes a lot of money. They are very profitable and they have great margins. So they're not a huge growth company by any means, but they are generating roughly $20 billion in revenue a year.
Okay.
They're generating around $8 billion in free cash flow, and I think around 6 or 7 billion in net income. I'd have to look at the actual numbers. They're
Whenever I look at December 2020, I'm just wondering, have they made, like, was their peak back in December of 2020? And have I'm looking at the blue line, revenue.
yeah, so the December means fiscal year. So that really should say fiscal year 2020. I just pulled it from Seeking Alpha. But that's fiscal
I'm
year
just wondering,
2020.
like, they're not growing year over year on revenue terms.
No, they
Okay.
have not been. They're kind of holding steady as they go through this transformation.
Is that across the board for tobacco companies?
Yeah, similar.
Okay.
So they are squeezing out 33% on net income and almost 42% in free cash flow. So I'm just going to pull up the actual net income right now for you so I can give you the exact numbers. Give me one sec. So in the trailing 12 months, they have generated $6.8 billion in net income and just over 8 billion in free cash flow. So very, very profitable. And you got to think, if they get back to growth and they keep these margins, every dollar revenue that they add, they're throwing 33 cents to the bottom line. So it's very interesting.
Yeah.
All right. Here's the other thing that I believe has impacted not just Altria, but other dividend stocks. So nobody is really investing in Altria for a growth play. Like, I'm throwing my money in Apple or Amazon or Google or one of those companies for capital appreciation before I think about Altria Group. Now, when we lived in a interest rate environment that was basically non-existent, dividend stocks, even Coca-Cola, look great at 3% when you can't even get 0.5% on a risk-free asset.
Mm-hmm.
But when the Fed increases rates at the quickest pace that they've done in the past 3 or 4 decades, and you have the 2-year exceed 5% and the 10-year exceed 4.5%, these risk-free rates of return look a lot more interesting, and investors start to think, why should I take individual equity risk to generate income when I can get a risk-free rate of return at these levels? So I think over the past year, we've seen more money go into these types of investments. And since the Fed is still hiking, I think that, and I'm part of it too, I put money in a CD and it matured and we rolled it over because we got a higher rate.
Yeah.
Now, I think there's a lot of people doing that. And I think that we're going to see that for the next 3 to 6 months. But once the Fed starts cutting, so I looked at the St. Louis Fed, they were projecting it goes down to 5.1% in 2024. I think it's 3.6% in 2025 and 2.9% in 2026. And then when I went out to December of 2024 on the CME FedWatch tool, the highest probability was 28.5% that we see the Fed funds rate around 4.5 to 4.75. So both CME Group and the St. Louis Fed are both backing up what Powell said at the last statement. The St. Louis Fed did change their economic forecast because I remember it being a little bit more steeper to the downside before this last presentation. So I think that as the Fed pivots, whether it's in the first half or second half of 2024, I think dividend stocks are going to come back into favor at some point, because let's just say they start cutting in June. Money that's maturing isn't necessarily going to reinvest it into a CD or a T-note if it's on a declining rate, depending on what the rate is. Some people may be good at 4.5%. But as we start getting into 2025 and 2026, becomes a lot less attractive because it starts getting to where you can get in the stock market, if not higher yields from REITs and other things.
So you're not saying that people are going to rotate from growth into dividend. You're saying people are going to go from
two different
risk assets to dividend.
Yeah, I believe so, yes.
Okay. All right.
Yeah, because if you're a growth investor, you have a different set of investment methodology that you're trying to achieve than somebody who's investing in dividends. A lot of people who are investing in dividends are trying to either generate income or create a portfolio that has dividend growth growing, as I showed in the example from Altria, to in 20 or 30 years from now have a stream of income coming in that is continuously growing.
And why aren't a lot of those investors investing in Altria right now? Because the yield would be higher regardless, right?
Yeah, I mean, it's a good question. I don't know. People could see more pain
Why
on the
take a risk?
horizon.
Why take a risk for 9% when you can get 5% free?
Yeah, it's not,
Because
the
it's
delta's
4% more.
not that big. And don't forget, Altria's been in a downward channel. There's no saying that that $40 resistance level isn't going to get shattered. I
Sure.
mean, it could keep going down.
Yeah. Yeah.
So, it's all about somebody's risk tolerance.
Yeah. And I'm assuming there's no real correlation with rates and how the actual business is performing. I'm sure, like, is that a true statement? Higher rates probably don't affect people buying less cigarettes and addictions and addiction. Is that fair to say or no?
Yeah, I don't think so. I mean, when we look at the revenue that they've generated, has been pretty
I mean,
stable, and their profitability has been pretty stable. And they're not a company that's just borrowing. I mean, they have like
Yeah.
28 billion in total debt. They have like 9 billion on the balance sheet in long-term investments,
Okay.
and their free cash flow is over 8 billion. I mean, this is a company that has like 2.3% EBITDA to net debt ratio.
yeah, I mean, the thing to say there is higher rates affect, I mean, not directly cigarette sales, but they affect your lack of disposable income, which then affect what
Yeah,
gets cut
but
first.
that I don't know if it does get cut first though, right? Doesn't Altria fall into the one of those stocks of recession proof? Like no matter what, people are still going to go out to eat at McDonald's. They're still going to buy at Walmart, and they're still going to go to the gas station and buy their Camel cigarettes.
Some people would consider it recession proof, just like Pepsi or Coca-Cola.
Sure. Yeah, I think it's. I don't know. I don't know. It could be correct, but yeah. I'm really like. I hope it's on your slide here. Is what's the total addressable market for cigarettes, and is that going down? Are people smoking less?
Just hold on.
All right.
Hold on.
I'm dying to see it.
So the current dividend is $3.92 per share. You got a 9.32% yield. Payout ratio is under 80% from their projected EPS. You got 58 dividend increases over the past 54 years and almost a 6% CAGR over the past 5 years on their dividend. Return of capital. This company is a return of capital champion, in my opinion. Buying back shares every year,
Nice.
increasing the dividend. You have a growing EPS, and it's just a complete cash cow, and they are giving it back to the shareholders.
Why is the dividend yield so high? Just because the stock price has been falling?
Because the stock price has been going down, yeah.
Is that
So
or
think about it. If they were at
56
50,
years of increasing it.
well,
Well,
in addition to
that was
that,
my other
let's put the
question.
calculator out. So the dividend's 392. If
That
the
was
share
my
price was 50,
around,
not 42, the yield would be 7.8%.
right. My other question was going to be like on the previous slide with regards to the high payout ratio. I mean, if they're distributing a large portion of their earnings as dividends, won't they have limited opportunities to keep raising them in the future? I mean, they can raise it by a couple of pennies here and there, but
Only if they're not growing EPS.
Yeah, so I'm just looking at some statistics here. On average, their annualized dividend growth has been 7.9% over the last 10 years. Over the last year, it's been 4.4%.
right.
So it is going down, but still, that's
Still
pretty
growing.
great.
Yeah, now this is their possible future dividend, Pat. So they said in the Investor Day presentation from their CFO that they are going to increase the dividend in the mid-single digit range annually through 2028. And I had defined mid-single digit the way most people would, 4 to 6%. They increased the dividend by 4.3% in August. August is always the month they increase. So when I look at what they say they're going to do through 2028, their dividend sticking at 4.3% should increase to around $5.05, which is $1.29 of total growth, or 34.27%. So there's 25 dividends remaining in this decade, And when I plugged in how much the dividend payments would be per year, because it's not $4.09 for 2024, it's two dividends at the 392 rate and two dividends at the 409 rate, because they increase the dividend halfway through the year. They don't increase in the beginning of the year. So when I did the actual math, if you were to buy shares now, Altria is going to generate, based on these projections, $27.75 in dividend income by 2030, which is 66% yield on capital invested today, not including what it would turn into if you reinvest the dividends. So this does become interesting, where in that early example of why Altria has been an exciting dividend growth stock over the past 28 years, this is just showing once again your yield on capital going forward. And that's only a 7-year rate.
So basically, if I can simplify, you get your principal back. You basically double up in by 2030. 66% yield, assuming a drip, assuming you reinvest.
Yeah, dripping, it would probably work out to get your principal back that area.
Okay.
Yeah.
And what's crazy, if I can add this is I don't know how true this is. This is according to Koifin here, but it's saying that the dividend yield is roughly 9% as of the last fiscal quarter, buyback yield about 1.6%, and the debt paydown yield about 0.9%. So adding all those up, you're getting about 11.48% of shareholder yield annually right now.
Yeah, and you got to remember,
And
when
that's
you're
increasing.
buying back shares, you're artificially increasing the EPS anyway, because your earnings are going across less shares.
Yeah.
So this is also a company that, as they repay debt, which they don't have that much of, lessen interest payments, and their debt maturities actually are not nearly that bad and very manageable for them based on their free cash flow. And this is a company that doesn't necessarily have to grow to increase EPS. It's kind of a beautiful thing because it's a cash register.
But the problem is, for me, at least with this company, is it's not certain that this industry is around forever. I think there's some real political issues. There's a lot of people don't like smoking. It's been going down.
Political issues for 70 years.
I also want to.
Yeah, I know, but it's been going down. I can't smoke on an airplane anymore. Like, the restrictions are getting stronger, not loosening.
Let's let him finish, because I also want to ask about the government regulation side as well.
Mhm.
But just go through your slides, Stephen, and then I've just been taking notes of the questions I have.
So this slide I made two different ways. You let me know which way is easier for you guys to see it. Like this,
The other way.
Second way.
the other way.
That
This
way's
one?
perfect.
Yeah.
Yeah.
All right. So I looked at the top 10 dividend kings by yield, and I threw PayPal in there because I know Tanner knows
Thank
their numbers pretty well. So I looked at forward EPS for 2023, 2024, and 2025, and then I looked at what their free cash flow is. And then I went down and did what their current price to free cash flow is, and then what their forward PE is over the next 3 years, and what their EPS growth is. Altria, you can buy Altria at 8.7 times their free cash flow, and their forward PE for 2023 is 8.43, going down to 7.77, 8.42% EPS growth. This company is trading like it is complete dead money, yet it pays investors back a ton. Now, if we see a rising market, if we see ESG start to really go away as these funds start to move out of those types of investment methodologies and actually add Altria into dividend portfolios or other types of large cap value portfolios, we could see increased interest and increased buying. And at these current levels could look like a magnet for investment professionals and fund managers to start buying for clients and funds, which makes it very interesting, because if you are looking at Coca-Cola trading at 21 times 2023 earnings or 18.5 times 2025 earnings with a 3% yield versus Altria trading under 9 times earnings with a 9% yield, makes a compelling case. So it's just one of those things where, to me, the numbers make sense. And then Mr. Market sometimes gets things mixed up. Philip Morris is basically the same business. It's basically the same business. The market cap is almost identically double, and Altria generates more cash from operations and generates 1.1 billion more in free cash flow. Yet the market cap is half. I
Yeah,
mean,
that's all growth that's priced in, though.
yeah, but the growth for that much to be priced in, their growth should be freaking so much more going forward. I mean, it's crazy to have that much more when the free cash, like with their growth,
Yeah.
maybe they generate the same free cash flow in 2025 as Altria is with their EPS growth. Maybe. It's just sometimes the market doesn't make sense. Like, and I think that this is one of these things where it's a broken stock, not a broken company.
Mm.
And those are the slides.
Okay. Devis, you want to go first?
Okay, well, so let's split it up into a couple of pieces. I think we can talk about growth. We can talk about like the sustainability of the investment around like downward risks. But I want to start at just the government regulation side, just the macro. Governments are disincentivizing people to smoke every year. I'm not sure. I mean, especially in countries where it's public healthcare, like when you get sick, government has to take care of you. Essentially, it comes out of their pockets. When you have privatized healthcare, it's who cares? Go do whatever you want. But I know here in Canada, it's just taxed to no end. It's like 20 something dollars for a bag of cigarettes, and you have all of these like labels and all that. And so it's something that you have this massive force pushing against that they're trying to phase out as much as possible. Now, I understand it's sort of an addictive substance and people are going to do whatever they want to do, but does that play any consideration into the future prospects at all?
Yeah, look, it certainly hurts. It's not good. If you didn't have those political risks and if you didn't have the potential for changing legislation that can seriously impact the business, then I think the stock would be a lot higher. And I think that that's definitely one of the things that gets investors concerned. I also think on the flip side, the tobacco industry is huge, creates a ton of jobs. And with all the lobbyists and everything, I don't know. I'm not too concerned. And I think that Altria is doing a hard push to move away from combustible cigarettes into a smoke-free with chew, dip, whatever you want to call it, and the heated and smokeless types of smoking devices. And look, there is a chance that this tobacco industry is not necessarily a physical cigarette 2030, 2035. That's definitely
Yeah.
a chance. I mean, I think cigars will still be here, but I think there's a chance cigarettes will be gone. But Altria is mitigating that risk now and making all the right investments to try to hedge their bets.
Do you have any charts, Steve, on just the smoking rate over time or something to point us to just as an industry, I guess to Tanner's earlier question, like the TAM?
No, I haven't looked at it. And look, it's not something I'm concerned about. This is something where I'm looking at their revenue, their profitability, and this has been a headline risk for decades. And they are still a cash cow. So while it is a headline risk and it's a real risk, it's something that I'm not necessarily concerned about. I'm going by the actual numbers, not what a diminishing smoking society is, because it's been happening for decades.
Yeah, they're also, I don't know. It seems like growth has been slowing for decades. like it seems like the stock has been flat for years and years and years and years, living off the back of a growing dividend. And it's like I'm wondering if it's ever going to have like an AT&T effect where that dividend breaks, and then you can have 50 years of dividend that goes down to meaning nothing.
Hold on. Stop right there. Retract that statement.
No.
Well, then you don't know what you're talking about. Retract the statement.
Okay, I retract the statement. Go ahead.
Why did AT&T's dividend decrease?
You tell me.
Well, don't make statements unless you actually know.
Okay, go ahead.
Okay, so AT&T spun off Warner Brothers Discovery.
Sure.
Warner Brothers into the Discovery, Warner Brothers Discovery. They
Yeah.
readjusted their percentage of free cash flow they pay out on the dividend because of the revenue that went to the new company. They didn't cut the dividend because they were in financial trouble. They cut it because they were getting rid of $40 billion entity and it lowered their revenue and free cash flow. All the shareholders got a special dividend, which I was one of the new company. So this wasn't a situation where, oh, we need to repay debt. We're cutting the dividend by 50%.
No,
This
okay,
was,
that's
we got a
fine. So
special dividend of a new company. And because of that, the dividend from the parent company readjusted to reflect the new free cash flow.
but what so aside from just the payout on the dividend, what happened to your share price?
Share price has been down for AT&T, but the dividend did not get cut because they were in trouble. It got cut because they got rid of a business and
Yeah,
spun it off.
that's fine. But the if the share price went down, that's the main part of the stock. You can get paid out in a massive dividend, but if the overall share price is going down, then you're still getting hurt if you can't return your principal.
So, okay, that is where you and I have a fundamental difference on this. If Altria Group never increases in share price and just kind of hovers in that area, I could care less. I don't
No,
need it to go up.
but hovering is fine. Hovering is absolutely fine. Decreasing is not what you want.
Right.
It depends how much it decreases. Like at these levels, if it
But
goes
what if it
from
has an AT&T event and it gets cut in half?
look, if it goes from 42 to 36 over a 5-year period or 10-year period, don't care. Because I'm going to be reinvesting every dividend. The dividends are going to be buying more shares and increasing my cash flow. That cash flow is going to continue to spawn and buy more shares and increasing over time. So it's a fine line. And to me, it doesn't matter
So
by any means.
Yeah, but
one thing I will add is that, like, obviously the falling stock price undermines the dividend, because if I'm buying this and the reason that I'm buying it is not the growth or the expanding total addressable market or the sort of forward trajectory that it has, I'm only buying it for the dividend and to get, let's say, my principal back in the next 7 years or 8 years, along with this buybacks, along with the dividend, along with everything else, and the stock falls, it only needs to fall, like 10%, 20%. And then all of a sudden I'm stuck holding this bag that I bought just to have the dividend, right? It's because you're not going to have any capital appreciation with this. So I do think that $40 support is something that we're putting a lot of faith into.
well,
Definitely.
and so if you look at Altria's stock price year to date, it's down 8%. After you include dividends in, you're still down 1.9%. So if you compare that to other stocks that potentially, if we're talking about why young people should be investing in this versus or dividends versus growth, I mean, SoFi's up what near 90% or something during that time. It's like, or I'm negative 1.9% after dividends. I mean, it's great, but here's the thing too: is that the conversation that we had before this call is, I actually like Altria compared to all the other stocks, because I do think that there's a benefit where tobacco can be seen in a good light, because I don't actually think tobacco in general is a terrible product. I think it's all the terrible things that they put in cigarettes along with the tobacco that makes it a terrible product. And so if you can create new smokeless tools that kind of allow you to have that tobacco without having all the extra chemicals, maybe it kind of gets out of that regulatory bad light. But it's like, how many painful years are you going to endure during that time to watch it dig itself out?
I mean, look, and that's why I said this is not a growth versus dividend income debate. It is, for me, something that I'm buying that I'm going to hold for 20 or 30 years, and I don't care what the share price does.
Right.
Like it
Right.
doesn't matter. Does it?
But when
Hold
you
on,
say
hold
you
on,
don't
hold
care
on.
what the share price
No,
is,
no,
you
no.
just
Hold
want.
on, hold on. It can go to zero, and I don't care.
Okay.
So when you have that frame of mind, that I am investing capital that I am willing to lose.
Explain that statement though,
Yeah,
Stephen.
that doesn't make any
Walk us
sense.
through that
It
one.
does make sense. It makes complete sense. So if you are investing money that you cannot afford to lose, you shouldn't be investing anyway,
Sure.
period.
Yeah.
So the capital that I'm putting into this and other investments, I'm in a position where if it goes down, it's not going to hurt me. Now, I am buying it because I think it is going to go up over time. And if it fluctuates and if it goes down to 30 and then comes back in 10 or 15 years, I can sit there and wait and continue to have the dividends reinvest, increase the dividend income, and increase the forward yield on my capital.
Yeah, one thing I will say is that I think with all of these like dividend stocks that have a rich history of increasing their dividend, there's like a huge hot hand fallacy, right? You assume that they're going to keep increasing just because they have until they don't anymore. You know, I
Yeah.
know Tanner brought up like AT&T as an example, but like Disney in 2020, they
Yeah.
had
Well, why are
problems,
there only 9 names on that list? Because all the other ones getting there broke.
right?
You
Like,
know?
but so here's the thing though, right? Because people are reinforced by the dividend increasing over time, that becomes their primary reason for investing in these companies. And with Altria, if their top line is slowly falling every year, and if let's say the market is going to be worse in 10 years than it was 10 years ago, then there's a higher probability that A, they're not going to increase their dividend by as much as they were, or B, there could be a chance that they don't increase it at all or even like lower it in the future, right? And so I do think that that alone will affect the like, because everybody is investing for the dividend, it'll be a rush for the exits type of situation when that flips, or
And
if that flips, let's say.
Altria has headwind risk from regulatory to a decreasing smoking society to medical risk. There is no question about that. What gives myself a sense of peace or calm is that they have 54 years of annual dividend increases. Their business is predictable. And no matter what the economic environment has been or whatever regulatory changes have occurred, Altria has figured it out. And I think that there are catalysts in the future. And even if it goes down 10 or 20% over the long term, the dividend income is more than enough to keep me involved, get back my principal, and have a much larger stream of income in the future as long as this trajectory continues. Now, if something happens where their EPS goes down or the dividend even comes under pressure, I would have to take a reassessment and possibly exit the position.
But it has
But
come under pressure, right? Like,
what
it has come under pressure
what's come under pressure?
over the past 10 years. The sequential rate at the increase of their dividend has dropped, right? Like,
Oh,
they're raising their dividend less today than they were 5 years ago.
from a
And
percentage basis.
yeah, of course.
But you know that in the beginning, going from 1 to 2 is a 100% increase.
Right. So
But going from 2 to 3 is a 50% increase, but it's still that 1 cent.
absolutely. So is that the reason though, or is it the fact that like the numbers are plateauing?
No, I think that the dividend is so high right now that increasing the dividend by 10 cents a year is a very small growth rate, but it's still powerful when you look at buying X amount of shares,
Right.
They do
especially with
so
that
much money in
compound rate
cigarettes. It's
every year.
it's crazy. Like they do $20 billion a year in tobacco products.
Yeah, I mean, once again, this is not a company that is unproven. This is a company where shit would have to really hit the fan for the investment thesis at this point to be blown up.
Yeah, but
You had
the
bought,
problem is whenever you have regulation as being the big or downside catalyst, is that it can be an overnight thing. Like
oh,
it can,
it definitely could be. There's no question about that. It
you know.
definitely could be. I am obviously betting with my capital that that's not going to be the case. I could be
Yeah,
100% wrong. Could be
yeah.
100% wrong.
I also wanted to take a look at things like their price earnings. I'm just looking over the last uh, 4 years or so. This is the cheapest time that they've been from a PE perspective, price to earnings. Um, Even from a PEG perspective, this is the cheapest that they've been. I'm just going through all
Do you
all
want
the
to throw it up?
different things using Koifin, by the way.
Do you want to throw it up?
I can, yeah, I can.
And then maybe from that, I can ask a little bit about the payout ratio. But you can go first.
I'm just taking a look at some of their P's is quite freaking low. I don't know what happened back in January 2019. That was extremely low. But for the most part, it's held higher percentages. So very, very low valuation right now comparatively to where they've been. And I've just been going through here and just taking a look at some of their different, things. It's a cheaper company now than most of the times in its history. Very interesting.
Yeah, and you got to think. I think a big portion of that is ESG investing because that really ticked up the past couple of years. Now, if I'm correct, is a different story. That's just an opinion of mine.
Yeah. Anyway, I'll drop the screen, but yeah, I'm just trying to take a look at this company and oops, sorry about that. In as many different lights. I mean, yeah, I guess I'm with you, Stephen. Honestly, I think that adults should be able to do what they want to do. I'm not personally against Altria at all. I've shown it off on my channel before. I'm not a believer in this being like a true sin stock in a way. But if the United States government and all of these things are pushing stronger and stronger regulations, like I'm pretty sure there was a problem with menthol cigarettes that was being taken away. All the flavors for the Juuls and Enjoys and all these things, which were made up the large bulk of their sales. I'm just wondering how many of these different pullbacks can you continue to have? It like really stifles innovation. If you try anything new, they completely take it away. And at some point, at what point of their payout ratio, like how high can that get? You're not going to bring that to 99%. Like,
well, so that was what I was going to sort of dovetail on. Like, the higher the payout ratio is, the higher the risk is if the company faces any type of financial challenge that they're going to have to cut their dividend, and so whether it be regulatory, whether it be supply chain, whether it be like, who knows, like some like natural disaster that affects their supply chain, let's say, and that's out of everybody's hands, them having an almost 80% payout ratio just makes it tougher because they have less wiggle room.
Yeah, so a lot of companies have a payout ratio between 60 and 85%. Some companies have very low payout ratios, like Apple and Microsoft. They're under 30%, I believe. They also pay less than 1% on the yield. Microsoft may be a little bit closer after the latest dividend increase, but it's not abnormal to see payout ratios in that area, especially for stocks that generate that large of a yield. Now, as I indicated before, Altria's EPS is expected to grow by 8.5% from the close of 2023 to the close of 2025. And while they continue to buy back shares, that is shares that they're not paying the dividend on. So they're saving on the money going out on dividend payments from those shares that get retired. And they are increasing their EPS. So, yes, there are a lot of headwinds, but there are also a lot of things that make this very interesting. And the other thing is market psychology. A lot of people who have been invested in Altria have been invested in Altria for a long time. If Altria went back to 50 or 55, nobody would bat an eye and think it's overvalued. Based on PE would be like 12 at that point. So it could be rock bottom right now. The declines could just be getting started. Only time will tell. I don't have a crystal ball. But they've been able to mitigate regulatory and headline risk for decades. I think they're going to continue to do it. They may not. But at the same time, they've had a predictable business that they've been able to give 54 consecutive years of dividends. When you think about what type of a company you have to become to be in that category, it's hard for me to imagine that they are not working with regulators and they are not coming up with contingency plans for contingency plans, because they know, management knows, if that dividend gets cut or if that dividend comes under pressure, they're going to see this stock go kaplooey. It's going to go down hard. So I'm not too worried until there's a reason for me to worry about it. I'm not worried about it due to their level of profitability and their long-term trends.
I mean, honestly, I'm just looking through doing my own stuff. I'm actually getting quite excited about this because tobacco markets are actually supposed to increase over time. Small growth, 3.4% compounded annual growth rates till 2030. It's small, but at least it keeps the dividend growth alive. It keeps things growing. It's just a matter of, I guess what I'd be interested in knowing is how fast the market is growing, and then if Altria is growing within that market, or if they're losing share to, to other players like Philip Morris that have, from the slide that I saw, faster.
So remember, I could be wrong. I believe Philip Morris is the European and Asian, whereas Altria is the US. And it's Marlboro.
Yeah.
So I think that's the arrangement where Philip Morris USA is one of their operating companies. I'd have to dig through the 10K to verify that, though.
So are those the only real two players in the space, Altria and Philip Morris?
You have Imperial Brands, and there is one other player that is pretty big. The name is escaping me at the moment.
And they all have pretty high dividends, right?
Yeah, Imperial Brands is very high.
Let's
see what it is.
Yeah, man, very interesting. I don't have anything else. I think, like, I'm sure if anyone out there has a dividend portfolio or anything like this, Altria is kind of a must-have from what I could see in your portfolio. It is very interesting. I'm not going to be buying it, but
so Steve, is this your favorite dividend stock right now at this point in the market?
No.
Do you want to say what it is?
It's up there.
Okay.
It's definitely up there.
What's your favorite one right now? Like from a pure dividends?
It's hard for me to say that. I have a couple that I really like. There's a chance Altria Group's in my top 5. I really like Verizon.
This guy has got a lot of dividends.
I got a lot of dividend stocks. I really like Verizon here. I really like Enbridge here. I really like Energy Transfer here. I mean, there's just some really good companies that have been beaten up that it's hard to look away from them for me looking to continuously buy income.
Right. Maybe I can just ask my last question and sort of turn it back on you, Steve. Of the factors that are like known knowns, I'm not saying like, oh, something black swan could happen tomorrow, but of the stuff that we know, what is the bear case? Like if you had to steelman the bear case.
The bear case is that the U.S. government outlaws tobacco and gets everybody to go along with it.
That's like a black swan thing. There's no bill at the floor of the House right now to outlaw tobacco.
Yeah, I mean, look, okay, so if we exclude that, the bear case is more people become health conscious. We're seeing that with diet trends.
Okay.
And
honestly, you really are seeing it, though. That's a real
You are
case.
seeing it. You're seeing a lot of people not drink soda as much. You're seeing
sugar's going down. Gym memberships are going up.
And not just that. Think about how big paleo and keto diets are. Like people are more health conscious these days. So you could see a scenario where people associate tobacco use with declined health, tobacco use with cancer, and tobacco use with just overall diminished quality of life, which
You're not a doctor, so I know that you're not going to be speaking from a. I don't know if you're not a doctor, but
No.
you're not going to be speaking from a point. No one's going to take your health advice on this, but I'm pretty sure that that loose leaf tobacco is a safer form to take into tobacco. If I'm correct, I'm maybe I'm
I have
misreading that.
no idea.
But is there a way, or at least are they talking about it on their earnings reports, that they're trying to make these things a little less cancer causing, or are they just completely out of the question
If you
of
go
the health
through
related cause?
the Altria presentations, they are doing a lot of innovation to try to mitigate risk, but
Okay.
I can't speak intelligently about any of that.
Okay. Well, they
But
can't be innovating too much. They got no money for R&D. They got to put all that money towards their 56-year dividend.
Like,
Here's
is the company just on earnings calls and such? Are they excited about anything on the horizon? Like whether it is vaping products or chewable
yeah,
or like
they
Kronos investment, like what are they most excited
they
about?
seem to be very excited about their heated and smokeless tobacco products
Hmm.
and their foothold in chewable or dip, whatever you want to classify it as, and the transition and that they're ahead of the curve in those areas. I mean, it makes it seem like they're going to be in a position of power for decades to come when I read through the earnings transcripts and I look through all the presentations. Now, if that occurs is a different story. I think that with everybody getting more health conscious, it's certainly something that you have to take into consideration. But once again, the way that I'm looking at it is as long as their profitability stays in this area, I'm buying it for strictly a dividend play because I don't see much downside risk in the share price.
Okay.
My investment thesis could get blown up. And if it goes to 35, it's just going to be, I'm just going to buy more and dollar cost average into it type thing. So I wouldn't get that hurt. This starts getting into the 20s, becomes a different story. Also depends when that happens. If it gets into the 20s, 20 years from now, and I've collected so much in dividends that it doesn't matter, it becomes a play where, all right, if the dividend keeps going up and it's going down, I'm just going to keep collecting my dividend income
Do you
because
think
it's
they
just
can
one of
increase?
many assets that's generating income for me.
Do you think? And I guess that's something that we didn't talk about is what is your hold time for this? Because do you think that they can
Definitely.
continue to increase their dividend for 20 years?
Yeah, I mean, look, if they don't give me a reason to sell, I'll hold it till I die.
What is
Well,
the longest current standing dividend on the markets?
So you have companies like I don't like saying bad information, but there are companies like I believe Enbridge
Okay.
and Coca-Cola and Procter and Gamble that have paid a dividend for over 100 years.
Okay.
Now, that does not mean that they've increased the dividend for 100 consecutive years.
it's Colgate, Palmolive Company.
Colgate's another one that
Longest
sounds
dividend
familiar.
payout records 128 years. Jeez.
Understood. Okay.
Yeah.
Okay.
Steve, if you're okay telling us, how long have you been holding this? Like when did you first start getting into Altria?
Just a couple of years ago.
Okay, it's not been a long
No, I would say, and I don't know off the top of my head, but I would say my average price per share has got to be 44.50, something like that, 44-ish, low 40s.
Yeah, I was really interested whenever e-cigarettes were blowing up, and I was
Lower
like, okay,
40s.
here's their whole next wave of growth right here. like that's going to be massive. And then once that kind of got stunted a little bit, and people were worried about the flavors and it kind of targeting children, I felt like the people weren't going to be as interested in that. It might not be growing as fast. And then I stopped, stopped looking. But yeah, so I don't have any other questions. Aside from maybe stock-based compensation, I didn't hear anything about that. Are they like, do they have a lot of stock-based compensation? I'm probably not, right?
Your CEO's only been there for 3 years, like this new guy.
Okay.
I'll tell you right now. Hold on.
2020.
And then while you're doing that, while you're typing in that, I've got a question just about Enbridge because you were talking about how buybacks are actually they're buying back shares of Altria is reducing their need to, pay out a dividend. Like every share that you take off the table, you don't need to pay that, 9% to. Why doesn't Enbridge buy back shares? Is there a reason for that I just don't know about?
Enbridge just did a deal for $14 billion buying 3 natural gas utilities from Dominion Energy. They're not in a position to buy back shares, I don't believe.
Gotcha.
I'd have to look more into that, but they've been making some acquisitions over the past couple of years and they've been expanding, and it's a different business.
Okay, cool.
Completely different business. Much more capital intensive. You got to remember, Altria Group, their CapEx is $225 million over the past 12 months. That makes their free cash flow huge because they're generating $8.8 billion in cash from operations. A company like Enbridge, they're spending $3.6 billion on CapEx. Like very capital intensive.
Yeah.
Enbridge is another great company. 28 years or 29 years of dividend increases.
Okay, wait. Let's not get into Enbridge. Just about the stock-based compensation. Well, let's stick on one stock.
I can't find it in the cash flow statement for some reason.
Okay, not a problem. We're past our hour, so I'm gonna wrap it. But
you guys love sticking with just an hour.
It's a show.
An hour.
Thank you all so much for joining us. Maybe you can stick around for the members only the members only video where we cover Enbridge. No, I'm not sure if that's gonna be the case, but
we should do it. I'll do it on the spot for you very quick.
Okay. Let me know if you can, if you're buying Altria, if it's in your dividend portfolio, or if you even care about dividends at all. Aside from that, ladies and gentlemen, if Tevis has any other words.
No, great episode.
We're heading out. Thank you so much. Bye for now.
Thanks, everybody.